I probably don't have to tell you how popular or how hot or how momentous artificial intelligence stocks have been in 2023 and now in early 2024. So I understand why so many investors are interested in AI stocks. That's why in this video, I'm going to bring you two AI stocks, Super Microcomputer and AMD. Excuse me. And I'm going to answer which one I think is the better AI stock to buy. So let's get into it. That's why I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So I mentioned what a tear these stocks have been on, and you can see Super Microcomputer stock from 2022. Look at how it has exploded higher. It was less than $100 per share in 2022, and it's exploded up to $637 per share as of this recording. Of course, I recommended Super Microcomputer stock as a buy in early January of this year. So it's been up substantially since I recommended the stock as a buy, but I did not recommend the stock around 2022. And so it's been on a good ride. AMD, meanwhile, is only recently getting its momentum going here, rising up to $173 per share. And I recommended AMD stock as one of my top stocks to buy for 2024. So let's see where these two stand in a head-to-head comparison. Starting with revenue, we can see for the trailing 12-month revenue, AMD at $22.68 billion has grown nicely in the last 3-4 years. Super Microcomputer at $9.25 billion is only recently starting its faster growth rate, and in fact, in its most recent quarter, revenue increased by 103%. But let's take a look at the total addressable market for artificial intelligence. According to Statista, the total addressable market for artificial intelligence is expected to grow to $1.85 trillion by the year 2030. That would be up significantly from the $207.9 billion in 2023. Artificial intelligence is popularized by large language models like ChatGPT, but there are more applications like driverless car technology, recommender systems, and more. Companies that stand to benefit from the growth in this AI surge is companies like Amazon, Nvidia, Alphabet, Microsoft, and more. Investors getting in today could realize exponential returns from investments that capitalize on the growing effectiveness of artificial intelligence. So now that you comprehend that growth that's expected over the next several years for AI, these two AI stocks are poised to benefit from that growing market opportunity. The next thing I wanted to compare these two on is their operating profit margin, and they have been similar in the last decade, although Super Microcomputer has been more stable and AMD has been more cyclical in its operating profitability, falling and rising above and then falling and now on its way up again. I would not be surprised if AMD soon passes Super Microcomputer again in terms of operating profit margin as the company rebounds, as the company's CPU segment starts to accelerate in the back half of 2024. Its gaming segment is still struggling, although I think the CPU, the PC market is going to recover in 2024, and that's going to be good news for AMD. I also want to look at cash flow from operations to sales. Cash flow from operations is one of the most vital metrics I consider when making an investment decision. If any financial shenanigans are happening, looking at this metric can help uncover the fraud. Moreover, looking at profitability without considering cash flow from operations can lead to a misleading picture of a company's performance. For instance, look at the example I have created here. The company reported a net loss of $250. However, when you look at the cash flow from operations, it was a gain of $35. How can that be? Well, two expenses a company must report on the income statement are depreciation and stock-based compensation. Importantly, These are non-cash expenses. Money is not leaving the company for these expenses. In the case of depreciation, when a company buys a machine for $750, it pays all of that price up front. However, generally accepted accounting principles require that the company take the expense over a period the machine is expected to operate. So if the machine is expected to last for 10 years, the annual expense will be $75 per year for 10 years, even though the company paid the $750 cash at the time of the purchase. Also, when a company offers its employees a stock option, it's not parting with cash. However, it must record the cash value of the option as an expense on the income statement. So moving on to the working capital items, inventory management is the easiest way a company can increase cash flow. The simplest case is when a business has 100 inventory units, sells 30 units, and doesn't replace those units. The decision would reduce total inventory and increase cash flow. As you might already be thinking, this isn't sustainable. Eventually, the company will deplete all its inventory and go out of business. Accounts payable is the money that a company owes another company and has not paid yet. And accounts receivable is the opposite. A company can increase its cash flow by collecting payments faster and paying suppliers slower. If done with skill, companies at scale can take advantage of these timing differences to boost cash flow by a couple of percent annually. Costco is one example that employs this strategy masterfully. Overall, if you observe cash flow increasing unsustainably, you should expect a reversal of that trend. The other big risk to consider is if you see a company reporting substantial profits but negative or weak cash flow due to rising accounts receivable. And so now that you understand the importance of this metric, you can see they've been similar, although AMD has been better than Super Microcomputer in recent years. You can see its cash flow from operations to sales exceeding 20% for a brief time before coming back down, but still above that of Super Microcomputer, 7.35% compared to negative 1.47% for Super Microcomputer. And let's look ahead at the prospects for the next 2 years. For AMD, Wall Street analysts expect 18% revenue growth in 2024 with 47% earnings per share growth. And for 2025, they expect 18.5% revenue growth and 37.5% earnings per share growth for AMD. For Super Microcomputer in its fiscal year 2024, analysts expect 30% revenue growth, 30% earnings per share growth, and for 2025, a considerable slowdown to 6.5% revenue growth with 17.3% earnings per share growth. So finally, let's compare these two on their valuation, and I chose to use the forward price to earnings ratio. And according to this metric, Super Microcomputer is less expensive at a forward PE of 22.56, and AMD is more expensive at a forward PE of 31.91. If these two were trading at the same price, it would be an easy choice for me to say AMD. But since AMD is more expensive than Super Microcomputer, it becomes a tougher choice. Because although AMD is better marginally over Super Microcomputer stock, it's not so much better than Super Microcomputer stock where I can comfortably say that it deserves this premium valuation, no questions asked. I do think it deserves the premium valuation, although I don't think it's a no-brainer. So I'm going to choose AMD stock, but this was a close call. But overall, I prefer AMD over Super Microcomputer for the fact that over the next few years, I expect AMD has better prospects than Super Microcomputer, and longer term, AMD has proven its capability to innovate at a longer term scale, and I'm more comfortable with AMD's capabilities than I am with Super Microcomputer at this point in time. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.